Hello, chart watchers, and welcome to this Monday, July 23rd Market Watchers Live show with your host, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, let's take a look at the market. We are starting a new week. Got a lot of earnings reports coming out this week. You can see the market. Actually, I've got one of these out of order, but we got the Dow Jones Industrial Average down 10 points right now. The S&P 500 has recovered off the lows, up about 3 points. The NASDAQ up 9 points today, and the Russell 2000 gaining a point. 10-year Treasury yield. Look at this move the last 2 days. We have seen a rise from 2.85% to almost 2.96% now. Volatility, after gapping up at the open, has pulled back. Financials doing extremely well with this rise in the Treasury yields. You can see that July has been a good month so far for the financials as the Treasury yield has begun to rise again. Utilities struggling today with that rising Treasury yield. Industrials up here, you can see also struggling. There's some earnings news out this morning, and you can get a quick sense of what this can do to your portfolio. Hasbro came out, beat on the top line, beat on the bottom line. The stock up about 13% today, doing extremely well. But on the flip side, you've got Illinois Tool, which is in the industrials, really taking a hit to the downside. This is part of the reason for the drag in industrials today. And Halliburton taking a big hit as they fell short of estimates. Erin, it was a long weekend for me, but how are you doing this Monday morning?
Oh, I'm doing great. I understand you had a pretty good weekend with the boys.
Yeah, we had 49 golfers this weekend, and golf wasn't so good, but I won the cornhole tournament, so it wasn't all bad.
Oh, well, see, there you go. Out of all those people, that's pretty impressive. I didn't realize you were a cornhole professional.
Well, maybe amongst these particular peers I am, but we had a great weekend. Got a lot of golf in. I played horrifically. I don't know what the heck happened, but it was just not a good weekend, but from a golf perspective. But I was with friends that we've gotten together for I think this was the 28th year in a row that we've done this particular event, third weekend of July. So it was great seeing everybody.
Wow. So you started playing in that tournament when you were 10 years old?
Yeah. Well, eight to be exact. But
8 to be exact. Okay.
Yeah, we've been doing it since 1991.
Wow.
So yeah, it's been fun. A lot of fun. How was your weekend?
Oh, my weekend was great. Tried to relax a little bit. Took a trip to the winery for dinner on date night. So that was great. Getting all prepared. I had to relax up, having you gone for 2 days. I always realize how much work you do on the back end that I don't see when you're gone. Trying to do both our jobs is very challenging.
Yes, it is, but it's fun to be back. I enjoy what we do, so this is awesome.
Oh, exactly. All right, well, let's get the party rolling here. This week we have quite a bit of exciting, lots of presentations, and Tom, you figured it out this morning. Trading earnings gaps is going to be the workshop he will do tomorrow. Roman and Bruce will be with us. They are the Wyckofian experts in-house, so we'll be talking to them. Dan Russo will follow that up on Thursday from Chaikin Analytics and the Power Feed on Stock Charts TV. Today's agenda, we're going to start off, it is Monday, so we're going to start off with Monday setups. We're going to follow that up with an earnings spotlight. John Hopkins is here. 10 and 10 to 1, our very first symbol will be Exxon Mobil, XOM, really big in the ticker cloud today. DecisionPoint report will finish off the program. I'll let you know what to expect going into this week. And let's go ahead and get into some technical headlines and news.
Okay, let's take a look. We got a lot going on today. Of course, earnings is in the spotlight all week. We're going to see the earnings really begin to pick up this week and next. I think between this week and next week, probably about 40%, maybe 50% of the S&P 500 will be reporting. The number might even be a little bit higher than that, but I know it's a huge chunk of the S&P 500 that reports over the next 2 weeks. We did have one key economic report out this morning, and that was June existing home sales came out at 10 a.m. It was a little bit less than expected, 5,380,000 units. The market was looking for 5,450,000. But you can see the huge run up here in the 10-year Treasury yield despite that weak economic report. Anytime you see a huge move like this in the 10-year Treasury yield to the upside, it means that money is coming out of the Treasury market. Prices are declining, yields are rising. This is 2 days in a row, as I mentioned at the top of the program. We've now seen about an 11 or 12 basis point jump since the close last Thursday. That is a huge move, and I think, at least in my opinion, this is beginning the resumption of that prior uptrend that we had seen before. You can kind of look at these lows coming across. We've got the rising lows, we got the rising highs, and I think we are now making a pretty significant breakout. For really the last month or so, maybe month and a half, we talked about how it was going to be important technically to get back through that 20-day moving average after barely doing it last Wednesday. Thursday, we went back down beneath it. That turned out to be a head fake. We came back strong on Friday, and now you can see a big move today in the Treasury yield. So I think we're making another push. 3%, not only psychological, but also you can see we actually did struggle to get back through 3% at the beginning of June. So I would watch this level very closely. If we get through 3, I think it's back to that multi-year high at 3.11%. We'll see what happens at that level. But what's happening in the market because of the 10-year Treasury yield making this move, you can see on a relative basis, this is the XLF, which is the financial ETF relative to the S&P 500. We had been declining. We topped back in February on the 10-year Treasury yield, made one little push here higher in May, and you can see the financials bottomed as we were making this push up. We tried to go up a little higher, and then we fell one more time as the 10-year Treasury yield was declining. But now that we've broken back up to the upside, it looks like financials on a relative basis are beginning to show a lot of strength. And if we go back into the member dashboard and you take a look at the sector summary, you can see financials easily the clear leader today, up 1.27%. Healthcare second at 0.21%. So today, this rally, or at least the rally from a sector perspective, it's all about the financials. And if you pull up the financials, you'll see that the 4 groups that I like to follow the closest are all at the top of this leaderboard in the financial space. And I think that's bullish. Banks, wasn't that long ago, we were talking about 450, 455 support had to hold. Now we've got the banks breaking out, taking out the early June high at 480. We've still got one more key reaction high in May up around 486, 487. Seems like we're on a path to take that out currently. Let's pull up the life insurance because this has been a beaten down group. You can see we've just continued to drift lower. We're seeing strength. We've seen some strength here in July as the 10-year Treasury yield has started to move up. I would expect that we're going to start to see more strength in this group in the days ahead, especially if the 10-year Treasury yield continues on its ascent. The other 2 financial areas, let's pull up the asset managers first. And you can see, again, all of the bottoms coming in here, in this case, between about 210 and 212. Not exactly flying here on the asset managers index. We are having a good day today, but after a really weak finish at the end of last week, you can see we were testing a major support level in 2018, so far bouncing off of it and holding. If the 10-year Treasury yield continues to move higher, I would expect to see some renewed strength in the asset managers. And then let's pull up the investment services, the DJUSSB. This one we have seen more strength in the early part of July. Pulled back, held that rising 20-day, which I think is a good sign. You can see as we made a breakout back in May, even the breakout that we made back in April, we failed on the pullback to hold the 20-day. See how we've done that the last 3 times? So far, that is holding this time. And another breakout on the investment services group at 1240, I think would be very bullish. So you could be looking at some of the stocks like Goldman Sachs. I mean, there's obviously others out there that are better. And if you wanted to figure out maybe some of the stocks within that group, if you go into the industries, go down to the bottom here under the financials, and you pull up the investment services. One way to take a look at, if you like the group and you think it is making a bullish move and you want to be part of this space, one way to do it is to pull the industry group up and then sort it by scooter. And this will give you some of the best options in here. If you like the small caps, you're going to get some great opportunities here potentially in some stocks. You can see Green Hill's already made a pretty big move. Don't know that this is the best one because it is overbought. But as you go through, you can just kind of take a quick glance hovering over the symbol as to one that might be appealing. CME looks like it's been consolidating. This is a large cap if you're more comfortable with the large caps. And if I go into my relative chart, now this is one that's got a pretty good scooter rank. If I go into my relative chart and we take a look at the relative strength, here you can see CME actually broke out in June above the March high. We pulled back, and during that pullback, though, the overall group was pulling back, but look at the relative strength. So CME is one of the leaders in investment services, and that could bode very well if the group continues to strengthen with rising treasury yields. So CME would be one that I would certainly give some consideration to. If we pull up Goldman Sachs, on the other hand, you can see that we have started to strengthen. A move back up above 235 would be bullish, but look at the relative strength here relative to its peers. So again, you've got a stock that's downtrending relative to investment services. And if we go back to CME, you've got a stock that's uptrending relative to investment services. So once you find a stock, or not a stock, but a group that you like, one way to find some strength is to simply go back into the industry group, pull up those individual stocks. Let me show you again how you can do that. You go back into the control center and go down under reports and analysis tools. You can get to the industry groups one of two ways. You can either pull up the industries there, or you can go into the sector summary and just simply click on the financial sector if you know that's where the industry group lies. Click on the group that you're looking at, and then you can sort it by scooter. I think that's a good way to just give you a head start on some of the stocks that are outperforming on a relative basis. The scooter should help you identify those types of stocks. So I think that's an interesting way to go. Now let's take a look at a couple other stocks. I know Tesla really struggling earlier today, but look at this candle. It is trying to hold on to 300. And when I think I actually annotated a chart here, so let me pull this up for you. Yeah, Tesla, we've been downtrending since what I thought was a pretty good breakout above 360. We couldn't hold the breakout, which is usually a problem, but we did hold on to the rising 20-day. We made another attempt, couldn't get through, and then we broke down. So 330 is going to be in an interesting area of resistance if we can get back on track here with Tesla. The stock is down about 4%, but so far maybe putting in a doji or maybe a hammer. We'll have to watch at the close. But I connected the trend line here along these bottoms, and you can see it's pretty close to the trend line. It's a little bit below the recent price support. So I think this afternoon will be pretty important for Tesla as we head into the end of the session. All right, let's take a look. I'm going to go back in one more time, and let's take a look at the weak part of the market. And that would be, I'm going to ignore the utilities. I'm not a big fan of utilities because I do think the 10-year Treasury yield is going to go higher, and most defensive areas are going to underperform. If the Treasury yield is moving higher for all the right reasons, which is a strengthening economy, then we should see financials, technology, consumer discretionary, and industrials perform better on a relative basis. So I'm going to avoid these, but let's pull up the technology group. And the first two groups you see there are the two that have been the strongest throughout 2018. And so let's pull up the internet stocks first. Let's pull up this index. You can see we did get a breakout recently, taking out that June high. We're still consolidating sideways. We're above the rising 20-day moving average. And when you look at this relative to the S&P, we pull up the S&P, we've broken out above recent highs, and 2,800 was pretty important, but we haven't cleared that January high. Let me stretch this out a little bit so you get a little clearer picture. But here was the high on the S&P, 2875. Here's the high, or this is where we're currently sitting, just a little above 2,800. So we're still down a little less than 3% on the S&P since that January high. But if we pull up the internet stocks since January, you see how much higher we've gone. So on a relative basis, we're seeing strength there. And then finally, also in the software space, you can see the strength here. Now, I have a little bit of a problem with software currently because we did see Microsoft produce a great earnings report last week, but on some very heavy volume, we printed a black candle. Now, we are up today, but we haven't cleared the high from Friday. I wouldn't be surprised if we turn back lower in Microsoft and maybe move back toward the 104 level, which I think would be a great entry into the stock. That rising 20-day coming up from just underneath there as well. We do have a number of upgrades, so I'm going to turn it over to Erin and let her go over those with you.
Here we go. We do have a few. I thought some of them were quite interesting, actually. Let's go ahead and look at, first of all, we're going to start with BJ's Wholesale Club Holdings, which was an upgrade today. I've made this chart since they're pretty much a new IPO. They've only been around about a month. I did change the style of my chart. This is a 10-minute bar chart. I just wanted everybody to know that. And right now, we've been in a trading range over the past week or so, and I don't really see anything here to tell me that we're not going to that we're going to get out of this trading range. In fact, if I looked at these two PMO tops, you can see they're moving down slightly as the tops are going up on the 10-minute bar chart. So sitting in the middle of a trading range, I wouldn't get overly excited here. I don't see a good risk reward setup here. And also, I tend to stay away from IPOs. I like to have stocks where I have some really good history before I pull the trigger. So it's just not my style to get in on one that's so new. But that was one of the upgrades. It's up 0.5% currently. Box Incorporated, also right in the middle of a trading range. The only difference is I think the PMO, it is below its signal line. It is trying to turn back up. We have a decent OBV, and I'd say the scooter looks okay. But the chart pattern here, there's nothing that exciting that I'm seeing except for the fact that we're holding that 50-day EMA support. And, we haven't been able to hold that 20. You can see that. It's just been moving back and forth, braiding across the top of it. So I see a stock in the middle of a trading range, a PMO that's lackluster, I suppose you could say. But you could, if you wanted to set it up a tight stop at that 50-day EMA, because it does seem to be holding that. And possibly with the upgrade, you're going to get a continuation. Right now we're up over 1.75%. Cliffs Natural Resources. This one I found quite interesting. This is the weekly chart. I decided I liked the weekly chart to talk about better than the daily chart, just because I could see the support levels and overhead resistance much more clearly. I think this one is it is cliff bars, but I do think this one looks rather tasty right now. You've got a PMO that's moving up. Those bottoms, the tops, all of that is moving up. And we've gotten that breakout above these previous tops. And I think your upside potential is pretty good, right up here in that $13 range. So some pretty good upside potential. Now, of course, it's on the week, which means today it's up over 9%. So I would clearly wait for a little bit of a pullback here. Here's the daily chart, just so you can get some context on that breakout. And, for me, when I see them move that quickly to the upside, I do expect to see some deflation of that balloon that went up so high. So I would be looking for a move back down. But I think once you get that pullback, this one could be very interesting on a watch list. So let's see. The last one I have for you is Tpg Specialty Lending. And we do have a nice breakout. Notice that long-term trend model buy signal. PMO was already on the buy signal back here earlier in July, even before we got that big push to the upside. So I like the looks of this. You've got an OBV going in the correct direction. And, again, you've got that big breakout. But it's only up less than a 1% move. So I would say, you got that pop and now you're getting a little bit of that pullback just on today's action. So I think this one looks very interesting as well. TPG Specialty, TSLX. All right. Next up, Monday setups. Time to see how we did. I think I did better than you, if I recall. So let's go ahead and look at the first one.
You did. You outperformed me.
Yeah, it was. It wasn't a supremely impressive week, if I recall. I got in at about 214.28. Currently reading it at 217.05. So here you go. Here were those setups. And yes, and then you had WMGI. So let's go ahead and look at that one too. All righty. Okay, so there's Intuit. Like I said, I got the breakout. It's sitting on that support level. I think this one still looks pretty good, even though we got a little bit of the PMO sort of flattened out after I'd gotten that signal to get in on Intuit. So we really have only, moved mostly sideways. So I'm not going to be bragging about that particular pick. Let's see, WMGI. There we are. Yeah, not an especially great week, but you are up 0.5% right now. So
yeah, I actually really like this chart still. The gap up that we saw back in that second week of June, actually the one beyond that second week of June, the volume picked up there. I think we filled the gap. I really like today's candle. We went all the way back down just a little bit below gap support, I think, which was 24.68, and today's low was 24.49. So we went below it. We took out the low that we saw on Thursday, and we're reversing. I really like it where it is right now. I think when I talked about this one last week, I liked it down to that gap support level, and so far it's holding. So I think this one looks good. I think it's in a bullish wedge if you were to connect those tops, and then also from that gap up in June, connecting those bottoms. I think we got a nice little kind of piece of pie looking wedge off of the uptrend. I really like WMGI, and it's also a small cap healthcare, which has been leading the market in 2018. So I'm looking for a big reversal here, and I think we're going to get a pre-earnings run up in WMGI, but we shall see.
All right.
Now we got to do it again. Of course, we got to go out on a limb every Monday. So let's see what we got this week.
Exactly. So I ran my what I call focused PMO scan, focused in that it only concentrated on the S&P 500 and S&P 600. This scan is, there's a link to it in the Market Watchers live recap at the very bottom of every blog entry. So if you want to go and copy this, that's where you'll find it. But basically, I'm looking for in that S&P 500 and 600, I want a PMO, if possible, that has not had a crossover just yet. And the PMO has been rising for 3 days. And I like to see a positive lineup of the EMAs. I want the 20 above the 50 above the 200. So to me, that is setting us up for the best, obviously Monday setups, as we call them. So let me go ahead and pull up what I have today. So there's my pick from last week. This week, I'm going to go with HFC, Holly Frontier, but let's go look at some of the others. I thought these were interesting. I ended up, when I ran that scan, I had 22 possibilities. So I just had to, as you do, you sift through those scans. I look for interesting setups, breakouts, as in this particular case. We have the PMO on a buy signal looking great, and we're just now poking out above this overhead resistance today. It is up 1.5% right now, so I did not select it as my Monday setup. I just want to give myself the, for the sake of this particular exercise with Monday setups, I only get to hold it a week. So I want to look at the ones with the most upside potential within the week. But I did like this one. I am going to probably put it on my watch list and wait for a bit of a pullback here. But I really like the PMO here. You've got the PMO signals in the past year have been very defined and clear. And those buy signals have been pretty successful overall. So I really am interested in this one, but it's not my pick. I think it's a little bit more of a intermediate term play than a short-term play. G3 apparel has been showing up on my scans for quite a while. We're getting that pullback that we'd want to see, and you can see that support level right at $45, and we're just, the tail today is almost touching down toward that level. And look at the PMO is now on a buy signal, or just below its signal line. We're just about ready to have that buy signal. I thought this one, G3, looks really good right now. Robert Half International, RHI. This one's been a really nice rising trend. And we've got the PMO buy signal now that kicked in since I did this particular scan. And, you already have that strong scooter. So I think this one looks pretty tasty as well, but it's already been on this run, and we're getting ready to come up against overhead resistance. Again, I think it's one for the watch list. Keep an eye on it, just because we did get that very clean PMO buy signal as of today, it looks like. But, we've had kind of a run up here, so I did not choose that. This was my second choice that I was going to go with. And, the main thing is we just got that nice breakout here above that $55 mark. You can see that was near that previous top just from last week. But you've got a nice clean PMO movement to the upside. There's certainly upside potential here, even at this first intermediate term area of resistance. I thought that still looked pretty good. So I think Supernus Pharmaceuticals looked quite good. And Wolverine Worldwide was the other one that I was looking at. Has the PMO buy signal right now, could be forming a bit of a flag formation. Again, we hit the overhead resistance. We didn't get the breakout, but we're getting the pullback right now, and it could be lining up for a punch above that overhead resistance now, given the fact that we've got the momentum starting to look really nice on, there we go, on WWW. But my pick, is Holly Frontier. I think this one had the best setup for a 1 week trade. I like the PMO is undulating upwards. We haven't quite gotten the buy signal. We're down today over 0.5%, but if we look at it a bit more closely, let's see if I can get a shorter term look at this one. Actually, we'll just do it right here. Instead of 1 year, we're going to go to 6 months. Make it easy on ourselves. There we go. So you can see, I'm going to annotate it, and then we will work our way back. I don't know what's the deal with my screen. There we go. Tighten that up. So you can see we went and went above that overhead resistance. We're now coming back down to test it. You've got a rounded bottom right here. I think you could make a case for a handle coming in right now. And with that PMO getting ready for that buy signal, I thought that looked, as I've been saying today, I don't know, am I hungry? Tasty. I thought this one looked good. So I'm pulling HFC, Holly Frontier Corp, as my choice for Monday setup.
All right. What was the price on that one?
It is currently $70.61.
All right. Sounds good.
Mm-hmm.
All right. I am going to go with the same stock I had last week. I'm going to go again with WMGI. I really like it. I like the space. I really like today's candle, assuming we continue. Let me get an update, because I think I refreshed this one. But yeah, still sitting at 25.14. So let's go with 25.14. So it's 50 cents cheaper than it was last week. I like that. But what I like looking at the chart is coming across here in May and June. First of all, we had the gap up back in May. And with that, that was an earnings related gap higher. And their numbers that had come in much better than expected. 198.5 million was their revenue. The market was only looking for 193.5, so they beat their revenue estimate by 5 million. The market was expecting a 7-cent loss. The company posted only a 1-cent loss, so an easy beat on the bottom line. And you can see the stock, which had been downtrending, and it's in a strong group, by the way. The medical equipment stocks have been very strong. So while the stock was downtrending, I wouldn't have been too interested in it. But after that earnings report came out, to me, that's a breakaway gap off of this downtrend. And since that time, you can see that WMGI relative to the medical equipment stocks, even though we've seen some pullback during the consolidation, we have bottomed in the relative strength. And I would look for strength almost from this level. I mean, we are at a relative support level coming across. So I think it looks pretty good here. As we've pulled back, and as I mentioned earlier, you've got higher or lower highs and also these lower lows. But if you connect them, you've got a squeezing piece of pie, which often an uptrend is a bullish wedge. So a breakout above about 26, I think, would confirm this pattern and would likely send the stock much higher. The recent high at 27.25 or so If you look back toward the beginning of May, this was a stock that was at $19 and in 7 weeks was up over 27, which was more than a 40% advance. I think the stock deserved a little bit of consolidation. That's what we've got. We've still got a very strong group. I think we're going to turn higher, not only in absolute price, but I'm looking for this relative strength line to turn back up as well. I think you can keep a fairly tight stop. The gap support's $24.68. You've got a recent low down here at $24. And if I pull up a weekly chart on WMGI, you can see that it's got a rising 20-week moving average, which is at 24.10. So from a longer term perspective, you could give it a little bit more room if you want. Short term perspective, I think 24.5 is pretty big. But I like WMGI, so I'm going to stick with it for a second straight week at 25.14. I think this could be the week where we get a nice move on WMGI. Okay, I got a bunch of other setups, so let me go ahead and bring these up. AMCX is the first one. The stock made a huge run in May and June on extremely heavy volume. We are starting to see more strength in the broadcasting and entertainment space, which is AMCX is a part of. But we've pulled back now from 68 and change all the way back to 61 and change. We now have a 50-day test. I think that this one is also ready to resume its relative uptrend as well as its absolute uptrend. Next up is BHC. This was the old it is still Valiant Pharmaceutical. They just changed their name. So they're now Bausch Health Companies. The ticker symbol went from VRX to BHC. I think this is a breakout level just above $22. We have been drifting down, very light volume. I would not be surprised to see the volume come back in and have a move to the upside. It is a volatile stock, though, so keep that in mind. Domino's Pizza, DPZ. This one is pulling back close to a recent low. Another one that had made a really nice move really since early part of June. I think consolidating. I'd like to see it hold the 50-day moving average so I can keep a fairly tight stop here. GLUU, I actually bought this one today. I like it on the 50-day test. Notice it also broke out right at $6. I'm looking for a reversal from this level. And by the way, I do own WMGI as well. And another one that I own that I also bought today is OHI. I think after the huge move we saw at the end of May, our reaction low came down here around $30. We continued moving higher, but notice the PPO. We had a negative divergence, and I think we needed this 50-day test and also the center line test on the PPO, and I think we've gotten both. I'd like to see the stock continue to hold $30 support there, so I will keep a tight stop on this one. PBH. PBH pulling back and testing support, but what I really liked here more was the weekly chart. And on the weekly chart, after making a breakout of a bottoming reverse head and shoulder pattern, you can see the volume come in here in June as we broke above these prior tops, the neckline. We're now testing the 20-week moving average. We are literally sitting almost right on it. So I think, again, if this is truly a bottoming pattern, you can keep a very tight stop on the PBH. RSG. Actually, I wanted the daily chart on this one. Let's pull up the RSG daily chart. And here you can see breaking out, negative divergence, came back down, tested the 50-day, also at price support, and a little bit of gap support as well. We gapped up here on June 11th on heavy volume, have been holding this gap support level just below 68, and the stock was recently up over 70. I think you got a better reward to risk now. This is a little bit more conservative, doesn't really move that fast, but I do like the chart. And then the last one I have is Zebra Technologies, ZBRA. You look at it pulling back, it's failing at the 20-day, but I still think it looks pretty good. Don't forget, huge gap up with earnings back here on very heavy volume. It's been trading in this gap support zone, but I think it could make a pre-earnings move to the upside. And this is another one I wanted to show the weekly chart on. And you can see that as we've been moving higher in 2018, we have been holding. We have not had a weekly close below the 20-week moving average. Currently, the stock is sitting at 146.27, and the 20-week moving average is at 143.89. So you don't have a whole lot of downside. And back to 160, I think you can see just to test that recent high would provide a really solid reward to risk trade. So those are the stocks that I have for this week. I'm going to stick again with WMGI. Erin has hers, Holly Frontier, HFC, and we shall see. We do another battle and we'll find out next Monday.
Yeah, we'll see how it goes. I'm feeling pretty good about my pick.
Yep, I am too. I love WMGI. I really like the space that it's in. I think it is. I think that breakaway gap changed the character of the chart, and we'll see whether or not it rebounds. But I think it's going to rebound this week. We'll see.
All right.
Okay, well, let's move on. It is time for our weekly earnings spotlight. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com. Better timing, better trades. Mr. Hopkins, welcome to the show. And how was your weekend?
Oh, Tom, thanks. It was great. I really enjoyed, watching the British Open. Some people don't know this, of course, but my wife's father was born in Scotland, so I've been privileged to be over there a few times. Including being at Turnberry at St. Andrews for British Open. So I really took pleasure in watching it.
Yeah, I thought maybe you were going to say not too many people know this, but I used to play in the British Open, and I was going to have to dispute that.
I didn't, but a lot of people also probably don't know that once I shot 62.
Well, did you finish the back nine?
The back nine was torturous. I can tell you for sure it got worse from there.
It didn't improve, that's for sure. Right?
It didn't improve. But anyways, this is like a great time of the quarter for us. We got earnings just coming out. Really started coming out seriously last week, and then this week there's going to be a ton of them. And but before we even get into that, I'd like to pull up a chart.
Okay.
On the XLF, and the reason I'm pulling that up is my last Chart Watchers article a couple of weeks ago.
Mm-hmm.
The market was, the NASDAQ's been doing great, but the S&P and the Dow have gone nowhere. And I said, maybe it could perk up a little bit if we get financials, to get some wind, behind the financials. And so I said, maybe, as the earnings season start, one of the sectors that could help start moving things along would be the financials. And you can see what's happened with the XLF.
Yeah, the 10-year Treasury yield, had been trending lower. And we've talked about that quite a bit on the program, that as long as that continued to drift lower, that was going to provide headwinds for the financials. But now we've seen the 10-year Treasury yield really perk up, moving up about 11 basis points just in the last 2 days. And there's no doubt that that is creating some tailwinds now for the financials. And if you get some solid earnings reports to come in here over the next week or two in this financial area, that could really provide the catalyst for this group continuing to lead throughout the balance of the month and maybe the rest of this quarter. We'll see.
Absolutely. And I've got a couple stocks to go over, and I know you've got a couple too we're going to talk about as they get ready to report earnings. But the first one I want to pull up is Momo, M-O-M-O.
Momo.
Momo. This is a stock, that had really solid earnings and then moved into consolidation mode. You can see, going back towards the end of June on that nice pullback, it just consolidated nicely. And last week I said, this one looks like it could be ready to make, it's held really nicely where it needed to after, moved up on nice earnings. So we got involved at about 44.40 or so. We got a price target of 48.50 and a stop about 43.45. So about a 4-to-1 reward to risk. And Tom, this is really what it's all about when it comes to earnings, is waiting for companies to report earnings, sometimes even waiting 3-4 weeks till they settle down some, and then getting involved and seeing if they can make that move higher again.
Yeah, well, this is what I trade. I don't just talk about it. This is how I trade. I love trading earnings gaps, and I'm going to talk about it and do a workshop tomorrow on some of the strategies I use. But I agree with you. I think looking at companies that report great results, you can see this huge move. The worst thing is buying at the top and chasing after you see a stock going up for a couple of weeks and then having to suffer through a 10, 12% decline over a week or two and then getting panicked out of it. And so I like to try to do the opposite. let the stock come out with its great results, let the market do what it wants with it, and then wait for a solid reward to risk setup. And I think Momo clearly in the low to mid 40s makes a lot more sense at this point than it does in the low to mid 50s.
I think so. And then in my article this week in the Chart Watchers, I talked specifically about a couple of stocks that already reported. They reported last week, and how you can see, what the difference can be depending upon the results and market response. One was eBay. Mm-hmm. And here's a case where, if you take a look at the chart here, I'm sure there are people who decided to hold the stock in the earnings thinking maybe this thing could pop some. It's, it's sort of been lagging. But you can see that it had a huge gap down on very big volume. And since they reported its earnings, it's down, probably 15% or so. So it's really a case where, when we ever talk about issuing alerts, trading alerts on stocks, the one thing we really are careful about is holding stocks into earnings. And it's great, Tom, when a stock, makes a nice move higher. But if you're sitting there holding a stock and it's gone nowhere, for a couple of months, and you say, well, maybe it'll pop on the earnings, it's down another 15%. It's kind of a sinking feeling.
Yeah, and when you look at eBay, I mean, the stock on a relative basis, I mean, we got a nice gap up back in February, but since then, eBay has been declining while you've got the Specialized Consumer Services Index continuing to rise, and we're not seeing any kind of technical development in eBay to make us feel very good about the stock. I mean, look at the relative strength. Since that gap up back in February, there has been hardly any strength whatsoever in the stock relative to its peers or relative to the S&P 500. I mean, eBay now is at a one-year relative low to the S&P 500. So when you get these kinds of results, if you're in a stock that's underperforming, don't be shocked when they come out and they miss on their earnings estimates. I mean, I think that's what the relative weakness is telling us, that this is a stock that is certainly a candidate for a miss.
I think so. And the last one I just want to mention is Microsoft. They reported earnings last week, made a nice little move higher, nothing dramatic, but it reached an all-time high. And this is a stock I'm going to really keep my eye on. And I'd love to see this thing pull back to 100, 102, maybe on low volume. And it might take a few weeks to get there, but I don't really care. I'd be very patient because I think if it pulls back, $5, $7, that the reward to risk on this one could be very nice.
Yeah, and this is a poster child for why you should be a member at Stock Charts and keep your chart lists and watch lists, because I think I agree with you. I think this is a stock you want to keep on a watch list. I don't want to chase it either. I mean, we do have the RSI up over 70. The stock's made a big run already in July. There's a pre-earnings run up on a stock where clearly the market was anticipating good results. We got it. And once the good news came out, you can see that black candle print. That could mark a top for a little while, even though we are strong today. If we don't make a breakout above that high from Friday, I agree. I think we could pull back. I don't know if we'll see 100 to 102, but I do think 104 is cards. That's where we were just before the earnings report. So that would be just filling the gap. And that rising 20-day coming up just under 104 also should provide some pretty good support.
Now, listen, I know you had a couple of stocks. We got some earnings coming up tomorrow. And I think that it's instructive to, look at a few of these.
Yeah, I'm going to pull up first, and let's just pull up this relative chart on Microsoft, because you can see that Microsoft, with that breakout, did break out relative to software, and you can see that software is performing well. So there's no doubt that this is a stock that traders want to be part of. It's in a strong industry group that continues to rise. These are the kinds of stocks, personally, that I would want in my portfolio, whether it's a trading portfolio or whether it's a long-term portfolio. You want stocks that are beating their peers and outperforming their peers. But let's take a look. These are all companies that are going to be reporting tomorrow. Texas Instruments. Now, Texas Instruments, when you look at the semiconductors, here's the absolute performance on the semiconductors. And they've been moving higher and, kind of maybe a little bit slower than, say, the software group. But we are continuing to put in higher highs and higher lows. And you can see the semis broke out here back in early June, and Texas Instruments didn't quite do it. But what I have noticed over the past 3 or 4 months, Texas Instruments is slowly gaining on its peers, It's outperforming now for about 3 to 4 months. And I'm just wondering maybe if the earnings coming up going to be the catalyst where we get a breakout on Texas Instruments. You have any thoughts on this one?
Yeah, and I'm taking a look at this one, and again, we won't hold it into earnings, but I'm going to watch it, and I'm thinking, I think that if they can, beat expectations and even better yet, guide forward, I think they could challenge that June 7th high at 118.48. I don't think it would take much to do that. And if it does do that, and gaps up nicely, then I'm going to be very patient and wait for this thing to pull back. Now, on the other hand, if they disappoint, then I'm probably just going to, and move lower. It's probably off my radar screen.
Yeah, let's see how they come out. I think it is going to be interesting because it could go either way. I like what's going on here with Texas Instruments in the last few months, but we are still below that relative high we saw in January. So let's see what the earnings come out. This is definitely going to be one on my radar as well. On to Eli Lilly. This one reports tomorrow, and when you look at the relative chart, you can see that Lilly actually made a very significant breakout before earnings, but I'm finding some mixed signals here. On this breakout, look at the volume. The volume has just not really been there. I mean, when you're talking about breaking out over a quadruple top at 87 and doing so in a group that hasn't been particularly strong, pharmas are starting to strengthen a little bit, but they're still well off their highs from January. This is clearly the weakest part of healthcare. But you've got a stock, Lilly, that has been performing extremely well.
Oh, yeah.
Its peers. So this one's going to be interesting. You got the breakout with light volume, but it's a stock that's been outperforming on a relative basis. I could see this one going either way for sure, which is why I don't want to hold it into earnings. But if they have a good report and pharmas continue to perform well, here's one of your leaders for next quarter.
I think so. The strange things about earnings is that you can look at a chart and it looks like, it's about getting ready to lift off before earnings. And then out of nowhere, they just match expectations or maybe miss a little bit, or they beat expectations, but they say, going forward, we're going to have to, we're going to be maybe a little bit softer, than we maybe thought. And I think about, Netflix, right?
Yep.
And, they report, I mean, that's like a giant, it's a cult. Everybody loved them. We saw what they did last week. They came up a little bit short and they just gapped down, on really big volume. And now it's having trouble making any traction here at all.
Yeah, Netflix is probably just consolidation bound for a bit.
Yeah.
Let's look at two more real. I'm sorry. Go ahead.
Yes. No, go ahead.
All right. Just two more real quick before we wrap up. First one, Biogen. Again, they report tomorrow. And recently they came out with some good news. We saw that massive gap up. They pulled back. Now they're starting to strengthen again. They're far from a breakout in 2018. The biotechs typically, historically, love the month of July. And we only have a week left. But you can see the biotechs have made a huge move here in July. And on a relative basis, biotech has been one of the leaders, and that strength has been building on a relative basis for the past 4 months. I think Biogen, this earnings report tomorrow is going to be very interesting as well.
I do too. I mean, barring like a major disappointment, which I'm not predicting one way or another, I could see over time, I could just see this one building in strength.
Yep. All right. And the final one I have is SHW, which is Sherwin-Williams.
Are you going to paint a good picture on this one?
I'm going to try best I can. I'll put maybe one code on it.
I got to brush up on my. All right, go ahead.
All right, here we go. 430. Look at the high back in January. We have been making steady progress over the last 3 months. And all the while, when you take a look at the industry group that it's in, which is the DJUSCX, and this is the specialty chemicals group, look at what's been going on in the industry for the last 3 months. It's been flat, going nowhere. And you've got Sherwin-Williams on a really steady move. I mean, we're up probably about 15, 17%, something like that over the last 3 months. I think some good news is coming on Sherwin-Williams. Of course, we have to wait and see. But when you're breaking out relative to your peers one day before the earnings report comes out, I think they could. I think this pullback of all these we've talked about, and I don't like holding into earnings, but of all these we talked about, I think this is the one. If I was going to buy into earnings, I think I might take a shot with Sherwin-Williams.
Yeah, and it's going to be interesting. We should keep track of these, right? So next time I'm on, a couple weeks from now, we'll see where these things are, and maybe some will break out, maybe some will will pull back to nice support areas. But all I can say is, be really careful holding stocks into earnings, number one. Look for the best of the best. Let them gap up nicely, pull back, get involved near key price or tech support. Keep a tight stop. Take your profits when they come along, honor your stops when they get hit, and I think it's going to help your bottom line.
Yep. Well, we looked at a bunch of stocks here, so let's go ahead and pull up the summary. You can see all the stocks that we just talked about. Of course, John had talked about some of the stocks that he pointed out in his Chart Watchers newsletter article this past weekend. And then we just went through and just speculated a little bit on 4 stocks that will be coming out tomorrow. It'll be interesting to see how they perform. But John, always a pleasure to have you on here. Have a great week, my friend.
Thanks so much. You too. Bye-bye.
All right. See ya. Okay, and there he goes. Always love to throw some puns back and forth with John. He and I, we are punsters, so we always have fun with that. But
I'm glad you do it with him and not me. That's
why.
I'm not big on puns. I don't know. I don't know. I've just never. Well, I'm probably because I'm just not good at it.
It does take some work. It's an acquired taste for sure.
Right.
See, you got that thrown in there again.
As long as they're not groaners. That's, it's the groaners. Oh.
Yeah. Well, you don't want those. But hey, for every few, you're going to have one once in a while.
All right. Well, we've got quite a few requests for our 10 and 10. We're still taking votes. So everybody should go out there and vote for which one they want to see, because the most popular is going to be our next symbol. I just wanted to point out the RRG. It's a little bit messy, but mainly I wanted to note, really what sectors are interesting to people right now. And clearly financials and healthcare is where everybody's interested. So we will be looking at a few of those, I'm sure. But let's go ahead and get started with the first one, which is Exxon Mobil. Tom, you ready?
I am ready. I will say that Exxon Mobil reports on Friday. I think it's Friday anyway, Friday morning. So let's go ahead and start here. And there you see Exxon Mobil. It's definitely bottomed, but you can see all these gaps over here with the heavy volume from January and February. And as we move back up here, that's really going to be the key. I'm going to just step back here a little bit and let's go with a year instead of the 6 months. But I think when you take a look, you'll see the heavy volume, see these moves down and look at that volume pick up. And as we've moved up, we're now into some key gap resistance zones. And I would say the top of these gaps, you can see right here is where we opened from this level. We dropped down. We're really struggling to get through. So I'm going to say that recent reaction high up at about 84 is going to be a big level on the upside. The other thing that bothers me a little bit here with Exxon Mobil is the trend line that was pretty solid, and we're now trading just a little bit beneath that level, and volume is just kind of light. So I think that there's a number of mixed signals. Again, I wouldn't hold the stock into its earnings report, but maybe what I'd be looking for is if we do have a good reaction, a good report, let's see if Exxon can clear 84. If it does, I think it's going to have a move right up to 87 to challenge that early February high. But failure to do so is going to be problematic. And keep in mind, the XOM is, I believe, roughly 23% of the XLE. So if you get a bad report, or really doesn't matter, whichever way XOM goes, chances are we're going to see the XLE following in that same direction. So there is some risk in holding the XLE into the earnings report, because in addition to XOM, I'm pretty sure Chevron, CVX, also reports on Friday morning, and that's 17% of the XLE. So you're talking about 40% of the XLE reporting its earnings on Friday morning.
All right. The next one, the most popular, is, oh my gosh, there is a tie. So I'll probably be doing, setting up both of them, but KRE. KRE.
All right, KRE. Well, that's the region. Yeah, regional banks. I still like the regional banks. I think that we're going to see eventually a breakout over that 65 level. They're starting to strengthen because 10-year Treasury yield is beginning to strengthen, and that is likely to result in perhaps another test of the June high around 65.5. That's what I'd be watching for. I think you've got really good support at about 60.5. Recent high 65.5. You can even see a little bit of short-term resistance right here at 63.5. I think if we clear that, though, because there was some pretty good volume on the way down, I think if we clear 63.5, we're going to make a run for 65.5. I like the group, and it's primarily because I think interest rates go higher.
All right. How about a consumer staple, Phillip Morris, PM?
Yeah, I wrote about them in my blog this morning because tobacco stocks were really strong on Friday. Phillip Morris had come out with their earnings. Was it Altria or Phillip Morris? Which one did you?
Phillip Morris.
PM?
PM.
Okay. I don't know why I typed in. I think it's just because it used to be an old habit that was Mo beforehand. But anyway, Phillip Morris, here you can see the heavy volume gap down and then the quick recovery on heavy volume. I think the problem is, if there's a problem, the overhead resistance. I believe that we're going to see Phillip Morris make a run for about 91.5. And we're sitting at 82.96 now. So I think there's clearly room to the upside. To the downside, I'd be cautious if we finished back below about 79. That's where we opened with the heavy volume from Thursday. But I believe that's the trading range, and I think we're going to go up and test the upper end of the range. But there was a ton of selling at 91.5, and I would expect that we'll see sellers when we get there.
Okay. Let's see, from the financial sector, Goldman Sachs, GS.
Yeah, we talked a little bit about this one earlier, so let me just pull it up quickly. And again, the big thing I'm going to pull up on a relative chart. The thing that bothers me the most about Goldman Sachs, even if interest rates go up and these investment services companies do well, the problem is that on a relative basis, we've seen a lot of weakness in Goldman Sachs. Here it is literally since this would have been the middle of April, but that's when we peaked. And look at this move to the downside over 2 months, a huge relative drop. So the group itself right here was going mostly sideways, but look at what Goldman Sachs was doing. It kept dropping. So on a relative basis, you can see that the money was rotating away from Goldman Sachs and into other stocks within the space. So I'm not a fan because of that move to the downside. I think that there could still be some issues on Goldman Sachs. I would just say this. If I was going to take a shot on Goldman Sachs, what I would do is watch that rising 20-day moving average. If that starts, you can see we've been holding it. And as long as this continues to hold, I would be okay. But if we go back down below the 20-day moving average, I think that would be a bearish development. So just be careful with Goldman Sachs.
All right. Next one was also quite popular in the chat room is Canopy Growth, CGC.
All right, CGC, got this one on a relative chart as well. You can see the pharmas have started to pick up here over the past 2.5 months or so. This one's moving in the other direction. It looks a little bit like a topping head and shoulder breakdown. So let's annotate that. I think you can see the neckline coming across at about $27 right here. And there's a left shoulder. Over here's the bounce to put in the right shoulder. And the breakdown was not on light volume. So I think that potentially that would measure from about 37 down to 27. That'd be $10. That would take you down to about 17. Normally when a stock moves this fast, I tend to use percentages rather than the dollars. But still, we're probably looking at about a 40% move, or 35% move, which is probably down to these lows at least anyway. Well, so I'd be looking maybe for a move here on CGC back down to the 18 to 20 area. And then you've got major support. I think the reward to risk would probably be favoring the longs at that point.
Okay. Next from the biotechs, Viking Therapeutics, VKTX. I think that Julius would probably have chosen this because of the direction and location.
All right. I like the chart. I think that as long as $9 holds, that's where your 50-day moving average is. That's where you've got price support. So here is the level that I'm talking about right there. So after this massive move, look at the volume. I mean, this is crazy volume. And that is a candle where a stock opens below 7 and closes at 10. I mean, if you think about it, when you get these big gap ups like this, you've got market makers who provide liquidity. They're on the other side of the trade. They're taking the short side. And so that's why most gaps fill and go back down. But when you get a gap up and it continues moving higher, that to me tells me that there is extreme demand for a stock. And so this pullback to $9 and then the move higher and all of this consolidation, I think $9 is your support. I think $13 is your resistance. And the closer you are down to 9.10, the better I like the reward to risk on a long trade. And as you get closer to 12, 13, I'd probably be willing to take some profits, although I think eventually we break through 13.
Okay. A cyclical for you, Haynes Brands, HBI.
All right, HBI. Pretty good action here. You can see the huge move. This is another one that was going down for a while on a relative basis, but has started to strengthen as the overall group, the clothing and accessories group, continues to push higher. So when you get these potential trading opportunities, when they pull back, in this case, hit the rising 20-day moving average, I think that can be a pretty good opportunity. You can see as we were hitting the 20, we were also testing some reaction lows around 21.60, 21.70. Now we're trying to make a breakout above the 22.5 level. So volume's is a little lighter. I might wait and see maybe if I can get a pullback back down to 21.5 again, where you've got some really nice price support, or look for volume to pick up as you break out above 22.5. Either way, I do look for the stock to eventually go higher. It's just a matter of whether or not you make the breakout now, or if we get one more pullback.
Okay. Next one is going to be HPR, and that is High Point Resources Exploration and Production Industry.
All right, HPR off of an uptrend. Looks like maybe we're establishing the right side of a cup. So what I would do here is just kind of mark that move to the upside. And then using that parabola, and I always like to use black for my patterns. But here is the top, here is the bottom, and now we're coming back up over here. So we're getting this cup kind of a formation. I'd like to see a little bit more volume come in and move up and test that 750 area. That's what I would expect. And then a pullback on lighter volume to test that rising 20-day would be great entry. Assuming this pattern continues and it pulls back, prints the handle, and then makes the breakout, 750 down to about 560 is $1.90. You tack that on, target would be 940.
Okay. Let's see. Next one for you will be ABT.
All right, ABT, Abbott Labs. This is one that on a relative basis I think looks real strong. This is a very good, solid pharma. And, putting this one into a chart list, what really stands out to me is that this stock, relative to its peers, relative to the pharmas, is very strong. The only problem with the stock is you can see the pharmas have been drifting lower, but they are beginning to strengthen. And I think if the pharmas can take out the recent high right there at 5.25, 525, then I think this sets up well. But we had a gap up on heavy volume. We have pulled back to a key area of support, gap and price. I like it. I think Abbott looks good. If there's one downside, again, it's the overall group, but the stock itself is performing exceptionally well. And I think this pullback to gap supports an opportunity to go long.
Okay. And let's see, the final one is going to be for our Canadian friends, shop.to.
Actually, don't need the relative chart here. Just hit resistance. I mean, I think this looks pretty good. It's just after this decline back at the second half of June, we've had a steady 3-4 week advance now all the way back up to that 230 level, and that is holding the stock back. And this is, kind of what I look to do as a trader is I look for these key resistance levels. So if I had played this, say, off of a 50-day test and it moved back up to that 230 level, I would take my money and run. It doesn't mean it's not a great performer for the long term. It's just that in the short term, it's hitting resistance, and I would expect to pull back. I would be looking for that rising 20-day moving average, which has already been tested a couple of times during this move. But if we pull back close to 215, 216, that would be an area where, from a short-term perspective, I might get interested again.
All right. And that completes the 10 in 10. And here are your symbols that we just went over. I will have those up in the Market Watchers Live chart list, and you can go to find that by just going to the blogs page and looking up the Market Watchers Live blog, and you'll see the link at the top of the blog. It's also in every single entry, so you should be able to find them. All right, with that, we'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
All right, it's time for our final market update. Let's see what's been happening while we have been chatting. We can see that markets opened down, but we're now starting to see a resurgence here, that it started just before lunch. The Dow is now in positive territory, as is the S&P, which made a nice run to the upside, currently up 4.5 points. We can see the NASDAQ is also riding high. NASDAQ 100 is back in positive territory as well. Mid caps and small caps hanging in there. It looks like small caps are having a little bit better of a day. We've got the TSX, though, not able to get into positive territory. And we can see that 10-year Treasury yield is rising higher, up to 2.96% right now. The dollar has been moving mostly sideways, as you can see with UUP. Gold gapped down slightly on the open, but has been continuing lower, down 65 cents for GLD at 115.91. USO opened with a big gap up, but has pulled all the way back to negative territory and is starting to challenge intraday lows from back on Thursday. The VIX is unchanged, currently reading at 12.86. So we're getting some moderate readings toward the bearish side, but I would say highly moderate. We would expect to see them much higher, the VIX much higher, above 13.5, 14, before I would really be getting concerned about bearish sentiment. And that's all I have for the final market update. Tom, did you want to make a comment on something there interesting?
Yeah, I just wanted to point out, this is a chart of the Russell 2000 relative to the S&P 500. So that's this black and red line going higher. And then the pink line behind it is the direction of the dollar, the UUP. And so as you can see, they tend to move somewhat together. And recently, just over the past couple of weeks, we saw the dollar trying to break out. We did pull back a little bit on the dollar on Friday, turning back up a little bit again today. But it seems to me like the small caps could be poised here again. We started to see some relative strength last week, but with the UUP moving back up near a high, I wouldn't be surprised to see the relative strength in small caps begin to surface again. So just wanted to point that out. I know we've got the DP report coming up, so I'm going to turn it back to you, Erin.
All right. Thank you so very much. Lots to cover, as always, in the DecisionPoint report. I'm going to start, first of all, with our DecisionPoint signal tables, so you can get an idea of where we are as far as the DecisionPoint trend models, which is, you'll see those on the daily chart. We track 5, 20, 50, and 200-day EMA crossovers to get these signals. And the PMO on the daily chart, weekly chart, and monthly chart is where we get these PMO signals. So what I wanted to point out in particular was that the OEX came in with a new buy signal last Friday. And if you look at the weekly chart, which I'm going to show you soon, you'll notice that the S&P 500 did not come in with one. It missed it by 0.02 of a point. And so, of course, currently it does have a weekly PMO buy signal, but that signal doesn't go final until after the final trading day of the week. So even though we're seeing a buy signal right now on the weekly chart for the S&P 500, we can't log that until Friday afternoon or evening once the market has closed. So let's go ahead and I'm going to take you over to the charts I am looking at as far as those scoreboard indexes. Sometimes my eye just catches what looks like a possible Fibonacci setup. And when I was looking at the various price levels of support and resistance, I found it very interesting that using the Fibonacci tool, that you got a pretty good lineup. And you can see right now we are just sitting right on the middle of that as support for the Dow. The PMO is still rising, so I'm feeling pretty good about that. But I'm going to show you the short-term charts, the short-term indicator charts. And I have to say, given what I'm seeing there, I'm not expecting a breakdown here. I'm expecting more likely some more sideways movement, and then maybe some upside, since we do have a PMO that is moving upward as it is. So I just thought that was interesting that those support and resistance levels were lining up very closely with the Fibonacci retracement tool. Right now, when I look at the weekly chart, you can see that it's very much not close to getting its PMO buy signal on the weekly chart. The Dow is definitely the laggard. And on Friday, we actually were seeing the PMO in the process of turning up. But with trading today, you can see that it is moving down now slightly. But again, those signals, what's going on in this chart doesn't go final until the final trading day is completed of the week. The NASDAQ 100, definitely one of the stronger indexes going on right now, but we do see the PMO has topped. It is moving mostly sideways, though, so we're not seeing that much of a deterioration in the PMO. Of course, the OBV it is starting to turn back down, but when you have these this high level of negative volume, that's what you would expect to see. We're sitting on support for the NASDAQ 100, and I believe that will hold. Unless we start to see, obviously, the momentum turning to the downside in a more meaningful way. That would be if we were to break down, of course, below that 7360 level, 7300 level, I'm sorry, right down here. All right, NASDAQ 100 weekly chart. It's looking quite positive. We've been on that buy signal for quite some time. For the PMO on the weekly chart. We did have a little bit of a scare where it came back down, but it did manage to bottom above the signal line. I always consider that especially bullish. And we can see the PMO is still rising higher. We got those new all-time highs last week. Doesn't look like we're going to challenge them just yet this week, but it is one trading day only. I would be looking for higher prices after some consolidation. The OEX. This chart, I would have to say the daily isn't all that exciting, but I would be looking for more trading, more sideways action. The one thing I can tell you when I look into the thumbnail that I find interesting is a possible flag. I mean, a really long flagpole, and then the formation of pretty much a textbook flag where you have, a declining trend channel to form that flag. So right now, I think that's looking very interesting on the OEX, but I don't know that we're done forming that flag because we are seeing that deceleration on the PMO. But look at the volume, much more positive volume OBV than we saw on the NASDAQ 100. The weekly chart for the OEX. There we go, bumping up against overhead resistance, but there is that brand new intermediate term PMO buy signal that came in on Friday. I think the OEX is actually lining up nicely, but I believe all of these indexes are going to have a little bit of sideways consolidation to deal with. Daily chart for the S&P, which I did show you a little bit earlier, on the buy signal, holding this area of support. OBV is trending higher, so I think that's positive as well. Want to see that support level hold just below 2,800. Weekly chart. There we go. And you can see it's really struggling with this area of overhead resistance / support that we're on. There is that PMO. I said PMO buy signal so close because, of course, when I wrote last Friday, we didn't have that positive crossover, but we do going into the week. But again, that crossover, we will not log that on our DP signal boards until after the market closes. I'm going to give you just a quick peek at some of the weekly charts there's the mid caps. Also on that PMO buy signal, it's been in process a lot earlier than we saw with the S&P 500. We also got a bottom above the signal line, just like we had seen on the NASDAQ 100. And I think all of that looks very positive. We're sitting in the middle of a rising price trend channel. You know, I'm going to give you a quick peek at this daily chart. We are hitting this overhead resistance at those all-time highs, but it's forming a very tight trading range. And so I'm not expecting really big down declines right now coming into this week. I do expect the markets to close lower by the end of the week, but not by that much. Let's see, we'll do IWM Russell 2000. And there we go. Overhead resistance at the all-time highs, still struggling to get through that. And we don't have a PMO buy signal just yet. We had a top below the signal line, which I always find especially bearish. But it looks like we had formed a flag. We just never actually managed to execute it. And an execution would require a move above that area of overhead resistance at all-time highs. I do expect to see those challenged this week, but again, I'm just not seeing the positive information I want to on my short-term indicators, which is what I'm going to show you right now. Here's why I'm feeling pretty bearish right now, but I'm not bearish enough to be looking for a huge correction or even a huge pullback right now. I do think we're going to have a negative week by the end of the week based on what I'm seeing here. We had the short-term indicators, the Swinland trading oscillators had turned up, and it looked like we were going to get a continuation rally. But once we hit that top and these indicators had bottomed, then we started this short-term declining trend, and that has turned these indicators back down. They are sitting in neutral territory, but we are starting to hit negative territory when you look at the STOV. And being that that's the volume component, I don't like to see it move negative before the STOB, because it tells me that there's some problems with volume out there that we should be aware of. So the big problem right now is these indicators are on a downswing. I would expect to see more downside action based on these indicators, but we are in near-term oversold territory for some of, when we were running into rallies. I think we're gonna have to push down past that, which is why I would look for more consolidation, maybe a bit of a pullback here, but I'm not expecting, like I said, a giant decline. I have to say intermediate term indicators are starting to give me pause. I'm not completely, worried by looking at them, because as I usually tell everybody, you are going to see these ups and downs. And, when we get the tops on these indicators, I'm okay with that. It's when we start getting the negative crossovers that starts to bother me more than regularly. So we do have these tops. We don't have those negative crossovers yet, so I'm still feeling okay about the intermediate term. It makes sense that we would see these indicators topping somewhat, since we did hit those highs earlier last week, and we are heading back down. So it's not a surprise here to see this, but it just makes me a bit uneasy about the intermediate term. Let's move on and look at the big four: dollar, bonds, oil, and gold. I am actually bearish on the dollar right now in the short term. We have a PMO top below the signal line. We had a failed test at overhead resistance, because you can see we closed below that previous top. So I'm seeing some weakness going on right now with the dollar. I'm expecting it to move lower at this point. And again, mainly based on that PMO, which has topped below its signal line. Just a quick peek at the weekly chart, we can see how powerful that overhead resistance turned out to be. It did match up back here on some previous tops on the weekly chart, but 2475 really does look like the stopping point, the the place where we need to go and see price test. The PMO is still looking very strong, however, on the weekly chart. So again, I'm not expecting a crash here. I'm expecting a test of that support level and then a move back to the upside. Gold is really interesting right now. And of course, you know, when you look at the correlation with gold and the dollar, they are reversely correlated, meaning that they tend to travel in almost exactly opposite directions. And consequently, I am bullish on the, or bearish on the dollar. So I have to think about being bullish on gold. And right now in the short term, I am. I'm getting a PMO that is finally starting to turn back up. We hit that area of support. Didn't actually even go down to that 1200 area to test, but we hit 1210 and started heading back up. What I find very interesting are these very deep discounts right now on the physical gold trust. It's a closed fund, so based on what the actual price of the gold is in that particular fund, and then what people pay for it, that's how you get a premium and a discount. And right now, when you have discounts this high, that is very bearish. And that tells me sentiment-wise to start expecting a move back to the upside for gold. And if we do that, what might we be looking at? Well, you can see it hit that important support, and we are heading back up. I think that there's plenty of room to the upside. But again, I'm only short-term bullish on gold because let's look at this weekly chart. Pretty ugly, have the PMO sell signal. All right, 2 more to go. USO, you know, big decline today. We've had some difficulty. We had a bit of a rise here. We managed to get back above this area of support, previous resistance at $14. But the PMO is still rather ugly here. We're on a sell signal. I would say the best thing to note would be that the OBV is now pushed much higher. And that is positive. We want to see a volume trend like that, but I'm not seeing the follow through just yet on USO. I do think we're going to be stuck in this trading range, the 14 to 1475 this week, probably into the following. And here we go with a look at the weekly chart. I don't think there's much of interest here, except we do have an intermediate term PMO buy sell signal that just came in, but we've been really twitching around here and flat as far as the PMO. So I'm not going to put too much in emphasis on that right now. TLT. And there you go. Big move down. It is crashing today, I would say. PMO sell signal moving lower quickly. I think we'll be lucky if it holds on to this 119 support level. But honestly, I'm looking at this. I would expect to see even lower prices on bonds to follow. We could even see a move back to now down to that 117.50 area, possibly down to test support at 115.50. And the weekly chart, I think, gives us a really good picture of this with this long-term head and shoulders pattern that I would say is still valid. And we get the breakdown below that 117.50, 116 area. We'll execute it, and that is a pretty big decline. It would take you all the way back down to the $90 range for TLT. And that concludes the DecisionPoint report. You are seeing the summary slides. There is the new OAX buy signal and where we're standing on the scoreboards. As far as the indicators go, I didn't go over the short-term one, ultra short-term ones, but they are reading mostly neutral. Short-term, as you saw, very negative. IT, not liking that top, but I'm not going to get too worried just yet. And finally, let's go ahead and look at what I said for the big four. I'm not going to go over this. It will be in the Market Watchers Live recap today. All right, so I know we ran a new poll, and I know that, Tom, you had a chart you wanted to show, but just a quick notice that the poll that is running is about our Monday setups and which of the Monday setups would you consider trading. And half of you said I wouldn't trade them, which is fine. Tom, you look like you've got the benefit of the doubt right now. So,
Well, maybe because last week didn't work. Maybe it's 50-50 proposition. Since it didn't work last week, maybe it'll work this week.
There you go. It was getting all ready. It was coiling up and getting ready to just burst forward.
Yeah, I like the space. So, I mean, we'll see, what we have there. But I wouldn't be surprised with healthcare leading. I mentioned earlier, pharmas have been the weakest part, but the other areas, WMGI is part of that medical equipment space. And that's been a really strong area, one of the strongest within healthcare. So, it's got some good industry tailwinds behind it. They did come out with some good news in their latest earnings report. They pulled back to a key support level. So we'll see.
Hey, I'm gaining. I just got 2% more. Woot.
Might overtake me here in the next couple minutes.
Exactly.
We do have some big earnings coming out after the bell, one in particular. So I wanted to pull that chart up real quick, and that is Google or Alphabet. I just can't get used to the whole Alphabet thing. I can do all these different name changes, but I can't go with anything but Google.
I think everybody knows it as that anyway.
Yeah, I think it would probably be really awkward if I just started talking about Alphabet. But when you look at Google's chart, we recently had a breakout, so that's good news. But the problem is the internet stocks in general made a breakout on this top back in June, and Google failed. And we did follow suit on the last one moving up. But when you look at the relative strength of Google versus the internet stocks, we're not far from a 1-year relative low in Google shares versus the internet index. And so I find this is going to be interesting. Now, it's in a great space. We haven't really had any awful reports in this space over the past couple of quarters. We've had a lot of really good news coming out of the space. But I do wonder going into this afternoon, I kind of talked about this out loud in my blog article this morning, if Microsoft really is topping, Google, could put a short-term lid on the NASDAQ 100 if they disappoint tonight. So what do you think?
Yeah, it'll be interesting. I know a lot of people were interested in the Microsoft chart too. I don't know if you want to pull that one up.
Sure. Yeah, we did talk about it a little bit earlier, but it's when you look at the relative strength here, you've got software moving up, very similar to the internet stocks. But in Microsoft's case, you can see they're breaking to a new relative high, 52-week relative high versus their peers, whereas Google is close to a 52-week low.
Mm-hmm.
And so I'm more comfortable with Microsoft. Of course, they already came out with their earnings, which were very strong. But I think in the short term, I'd be a little careful with Microsoft. But I don't know. Anytime I see a stock that's underperforming its peers, I worry when we go into earnings.
Yeah, I have to say I would be a little concerned as well. I don't know that they did get hit with that fine, I guess, in the EU, in Britain, I think, as far as, a non-compete or, was what, $5 billion fine or something to that effect. So I don't know if that's really a problem for a company like Google, but.
Well, most companies on the market, that would pretty much just put them under. But
right.
Google and Apple and Facebook and Microsoft, I mean, really, we're talking about a flea.
Yeah, exactly. Well, what a great way to start the week. I'm glad you're back, Tom. It was a pleasure as always.
Yeah, it's always fun to get back in the saddle. It's fun talking about the market, seeing what's going on, looking at the daily changes if there are any. But earnings are the main topic this week. So that's what we all have to be focused on as we go throughout the week.
Absolutely.
All right. I want to thank everybody for being with us today. Please remember to complete the survey as you exit. We love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. Get set for Google coming up after the bell with their earnings. And we'll be back here tomorrow to talk about it. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.